IMF program and its implications it could have in the country's environment. Uh, Again, certainly we all know the IMF implications are both for revenue, expenses, taxes, withdrawals, our own taxes as well, and again, the entire landscape in terms of economic trajectory. It could have impact on the overall policy making. So given these conditions, given these considerations, we requested Mr. Abdul Rehman Warraich, who is very well known on the CFA Society forum already. Warraich Saab is our member, and he kindly agreed to accept our request and come forward and discuss in detail about the IMF program and how to understand its technical areas, particularly the quantitative targets, and going forward how the country can face challenges in terms of meeting those targets. So with that, I would just introduce Mr. Warraich up as well. Although we all know he's been a regular speaker here, Saab has considerable experience, more than 2 decades of experience in both private and public sector. Previously, just recently, he was associated with the Ministry of Finance as DG Debt. And recently, he has taken an assignment as a consultant with the provincial government, advising on the overall fiscal management. Warraich Saab is a member of CFA Society Pakistan. And before we move towards the formal program start and the program sharing by the Warraich Saab, I would just quickly mention the few of the housekeeping rules. Again, considering that today's situation, there have been talks about we have, let me just handle the technical area. Is it better now? Okay, sorry for that glitch on my part. So today's there has been lot of talks about potential disruption in the internet services. So if that happens, we'll try to re-log in. So bear with us, and we'll give us time to re-log in and connect if any disruption happens. So just the program format. So it's a 1-hour program. Initially a presentation by Mr. Warraich Saab, and then a Q&A. For that, I have requested my colleague, also a member of CFA Society Pakistan, Mr. Awais Sattar, head of research at MCB-Arif, Habib, to moderate the Q&A. You can post questions through the chat box that would be enabled when the Q&A session begins. And at the end, you would be requested to share your feedback. Now, with that, without wasting further time, I would invite Mr. Abdul Rehman Warraich to please, the stage is yours. You can begin the session. Thank you so much.
Thank you so very much, Mr. Asim and Ms. Sarwat, Mr. Awais, and the entire CFA Society for this opportunity. Before starting the presentation, I would like to make a disclaimer. I do not consider myself to be an expert on the IMF program, but I am honored to share my understanding of the program, and I believe that my unique contribution in this session could be some of the insights that I gained by participating directly as one of the members of the Ministry of Finance's negotiating team, which has been negotiating the program with IMF. Although my engagement was mostly on the side of debt management, but still being part of the team at the Ministry of Finance, I had the experience to participate in some of the other meetings as well. So perhaps you can benefit from the context and the perspectives that I gained by virtue of that experience. So let's
Apparently, there is some disruption. Okay, now it's okay.
Right, right. Now we can see. So this is just a list of abbreviations. I'm sure most of you would already be familiar with them. So let's move on to the next one. Before getting into the details of the IMF program, I just wanted to share with you the three key functions that IMF performs and advice for me to find
Warraich, you're on mute. Ren, if you could just let him be.
Yes, I have unmuted myself.
Please
I
start
think the
now.
connection was lost for a short while. So I was just saying that it came as a pleasant surprise to me that IMF is not only the lender of the last resort, but a very valuable repository of research and analysis also for a very large number of countries around the world. And IMF is also in the business of providing technical assistance to its member countries. So these are very valuable services that IMF provides, and many of us are not even aware of that. Next slide, please. So if you go through the most recent document published by the IMF, you will find the IMF's perspective on Pakistan's economy. So I have just tried to summarize that. IMF's assessment of the current economic situation of Pakistan is that prior to COVID, Pakistan's economy was doing pretty well. It was turning the corner and was stabilizing. However, COVID shifted the policy focus to higher expenditures, particularly for social support, and to some extent to provide economic stimulus to the economy. However, despite some of the slippages in the targets that were originally set by IMF and agreed by the government of Pakistan, now the situation is again improving. Economic growth is reviving, inflationary pressures are easing, although inflationary pressures are not as low as many of us expected them to be until a year or so ago. However, if you compare with the time when we entered into the IMF program, you will definitely appreciate that inflationary pressures are on the decline. Monetary policy, although is accommodative right now, but the IMF thinks that it's quite appropriate considering that there is slack in the economy. The spending levels in the economy are rather low. So the aggregate demand is low relative to what it should be. Therefore, the monetary policy stance is appropriate currently. The banking sector of Pakistan is quite stable. Most of the banks are profitable. They are doing well, which is great because banking sector serves as kind of a backbone for the economy. It collects the savings from the entire economy and then channels those savings into different kinds of investments. The external imbalances, all you are already aware, have improved a lot. The current account deficit, which had increased by a huge proportion, has come down significantly. In fact, in the current year, Pakistan is actually running a small current account surplus. So that is a big improvement achieved over a relatively short period of 2 to 3 years. And fiscal consolidation, although not as aggressive as IMF might have wanted it to be, and the country needed it to be, but still the direction is correct, and fiscal consolidation is happening. A number of revenue measures are being taken by the government, and there is a lot of discipline on the expenditure side. So the indicators on that account are also definitely improving. Next. Just 3 or 4 key variables that would describe the economic outlook in IMF's opinion. IMF believes that the real GDP growth in Pakistan has a potential of 5% per annum over the medium term. We all know that GDP growth has been much lower recently, but IMF is projecting that the economy is on a path to revival and the GDP growth should converge to its potential growth rate of 5% by no later than financial year 24. Average CPI inflation is being projected by IMF over the medium term at 6.5% per annum, and it is projected to converge to that level by FY24. And as far as the current account deficit to GDP ratio is concerned, IMF believes that over the medium term, a current account deficit of 3% of GDP per annum seems like a sustainable and a realistic level of the current account deficit for Pakistan. And IMF does expect that it will be gradually achieved. Right now, in the current financial year, Pakistan is running a small current account surplus, which, as the economic growth revives, is expected to turn into a small deficit, which will gradually, over the few years, in IMF's opinion, converge to 3% of GDP. As far as public and publicly guaranteed debt to GDP ratio is concerned, right now the ratio is above 90%, which is quite high and not satisfactory at all by the international standards. But with all the fiscal and monetary and the other structural adjustments which are expected to take place with the help of IMF, the IMF is projecting that the public and publicly guaranteed debt to GDP ratio will also decline to around 70% over the next 5 years. So that is by financial year 2026. Next slide, please. So what are the risks to this economic outlook in IMF's opinion? First of all, IMF has highlighted the heightened global uncertainties due to COVID, the GDP growth, the global GDP growth, international trade and remittances, all of these can potentially be affected because of the pandemic and because of the resulting uncertainties and slowdown. Domestic vaccination challenge is a big one. Pakistan is a huge population. And so far, the vaccination process is happening rather slowly. So that is another concern for the IMF. And probably the biggest concern is potential policy slippages, which in IMF's opinion can happen partly uh, because of the weak implementation capacity in many parts of the government, and because of the entrenched vested interests also. And of course, another potential risk is that if Pakistan does not properly meet the challenges and make the policy changes that are needed to comply with the anti-money laundering and counter-terrorism standards that have been accepted around the world, that can dent the international investors' confidence, and that can hamper external financing and investment. So that is another potential source of risk. Higher oil prices, we are familiar that Pakistan is heavily dependent on oil imports. So higher oil prices always pose a risk to Pakistan's economic growth and stability. And IMF has also pointed to the potential for heightened, for increase in oil prices due to growing geopolitical tensions or other disruptions in the oil market. And of course, the deteriorating investor sentiment around the world can adversely affect Pakistan's economy. The reasons have already been discussed by us, could be due to higher oil prices, global slowdown, all these factors, a combination of all these factors. Next, please. Now coming to debt sustainability, because this is one of the primary concerns for IMF, that the fiscal situation and the debt of a member country must be sustainable. So IMF has a very elaborate debt sustainability analysis framework, and after running its analyses, the IMF has concluded that Pakistan's public debt is indeed, although it's high, but it's indeed sustainable. I would just like to give you a quick overview of the variables, the key variables that are analyzed by IMF before concluding its debt sustainability assessment. So there are two main variables, the debt to GDP ratio and gross financing needs to GDP ratio. IMF projects these variables under a baseline scenario and under a number of stress scenarios. The stress scenarios, of course, pertain to the key variables that can be seen as the major factors which influence these variables. So these, of course, include the real GDP, the primary balance of a country, the real cost of borrowing of the government, the outlook for the exchange rate, whether or not the exchange rate is going to appreciate or depreciate significantly in real terms. And of course, a contingent liability shock, which can potentially arise out of the state-owned enterprises whose obligations have not been explicitly, either not been explicitly guaranteed or have been guaranteed, but are not already a part of the public debt due to certain reasons. Next slide, please. And apart from those two variables, IMF evaluates the debt profile of a country on 5 vulnerability indicators. These include market perception, which is basically evaluated by measuring the spreads at which the tradable international bonds of that country are trading relative to a benchmark or a reference rate. Then another vulnerability indicator is the external financing requirement that a country has to meet during a single financial year. Then there is the trends in the proportion of short-term debt as a proportion of the total debt, whether it is growing or declining. A significant increase in short-term debt, of course, is not a good sign. And then finally, 2 indicators relating to the debt, which is either held by non-residents, even if this one includes the portion of the domestic debt also, which is held by non-residents. And finally, the debt that is purely denominated in foreign currencies. So the IMF, the risk assessment, there are actually 3 levels or categories of risk assessment: medium, low, medium, and high. And IMF has assessed the risk to debt sustainability for Pakistan as high for the stress scenarios under both the variables. So both in case of debt to GDP and GFN to GDP, IMF believes that although Pakistan can sustain its current level of debt, but under stress scenarios, things can become difficult for the government. But in terms of vulnerability indicators of the debt profile, the IMF believes that all 5 of the vulnerability indicators fall either in the low risk or the medium risk category. So that is relatively, that's where Pakistan is doing relatively better. Next slide, please. So the key objectives of the IMF program, as per IMF itself, include supporting the overall economy of the country, ensuring its debt sustainability, advancing structural reforms in the country so that it goes back firmly on a path of sustainable development, and of course, maintaining social spending and social cohesion. IMF, of course, does not want that as a result of the measures that are implemented in response to the program, there should be any wide-ranging social or political unrest in the country. So the IMF is mindful of that, and it has a strong emphasis on maintaining the social expenditures at all costs, or even increasing them if there is a strong justification to do that. Even though IMF is generally a strong proponent of strong expenditure controls, but it creates an exception for social expenditures. Next, please. The 5 main pillars of the IMF program, 5 or 6 main pillars would include, of course, if we become a little more specific, would be fiscal consolidation, but at the same time making sure that the government is spending adequately on infrastructure and social services or social support. Improving the debt profile and lowering the GFN to GDP ratio, and of course the debt to GDP ratio to sustainable levels are important pillars or aspects of the IMF program. Running an autonomous and independent monetary policy targeted at inflation and price stability is, of course, one of the key pillars of the IMF program. Market-determined exchange rate, in IMF's opinion, is a very, very important part of the economic policy, and it acts as an automatic stabilizer and helps the country avoid any major imbalances and at the same time build external buffers in terms of higher reserves and all that to adjust to the changing economic realities. A particular challenge that Pakistan's economy has been facing in recent years is the problems in the energy sector. So Pakistan government has been running huge quasi-fiscal deficits in the energy sector operations, although these operations are being managed by a few state-owned enterprises. But the reality is that the cost of generation and distribution of electricity has been much higher than what the government has been able to pass on to the consumers and actually collect from them. And the burgeoning circular debt has over the years become a major challenge for the government. So restoring the financial viability of the energy sector is very important for the IMF. And then, of course, certain structural reforms, which IMF believes are important for the strengthening of the country's policies and its institutions, include the anti-money laundering regime, the governance of state-owned enterprises, and taking measures to improve the business climate in general. Next one, please. I have tried to list the binding performance targets here, and I've listed them only for the 2 quarters, one which has just ended and the other one which follows. So these are 7 or 8 performance targets, which are very important for the IMF program to continue and to reach completion successfully. First is the floor on net international reserves of SPP. When the IMF program began, the net international reserves were in the range of negative $15 billion US. So IMF is trying to make sure that the situation is reversed. And then, of course, a ceiling on the net domestic assets of the SPP to make sure that the growth in money supply is not too high and does not lead to higher inflationary pressures. A ceiling on state banks' stock of net foreign currency swaps and forward positions, because these are also kind of external liabilities for the central bank. So it is important for IMF to make sure that the country's exposure to these external liabilities is reduced with the passage of time. And then in my opinion, the most important target, particularly in the context of Pakistan, is the ceiling on primary deficit. I hope most of you are aware of what primary deficit means, but I would still quickly share the definition with you. If you subtract all non-interest expenditures from all the revenues of the government, you end up with the primary balance. And if the non-interest expenditures are higher than the government's revenues, then the government is running a primary deficit. You can think of it as a negative operational income or an operational loss if you were to think of the government like a corporation. So in private sector, we are familiar with the concept of operational losses. So if a country is running an operational loss, we call it a primary deficit. We will discuss more about it later in the presentation. And then there is a ceiling on the government's budgetary borrowings from SPP, and it is actually declining with the passage of time. When the IMF program began, the government had huge outstanding loans from the central bank. And now the IMF is making sure that these loans are gradually retired. And the next is a ceiling on the government guarantees. This is a rather new quantitative target that has been introduced in this IMF program. Previously, it was typically not introduced, not imposed by the IMF. But considering that Pakistan's public debt and publicly guaranteed debt combined are quite high, therefore IMF has imposed a ceiling on the stock of government guarantees. And right now it is in the range of 5.5% of GDP. And IMF wants it to stay at that level. And I think most of you would be aware that the IMF wants the government not to resort to the central bank for borrowings. We all know that excessive government borrowing from central bank has undesirable impact on the economy. It leads to greater inflation, impedes the development of capital markets, and acts like as a moral hazard for the government to spend more because it can borrow at almost no cost from the central bank. Next slide, please. These are some of the structural benchmarks. I listed only the ones which have to be met by the end of the current financial year. So these include the establishment of Treasury Single Account, the first phase in which only the commercial bank accounts maintained by the ministries and departments of the government will be consolidated with the Treasury Single Account already being maintained with the central bank. So I'm sure the bankers are already aware of this development, and some of the commercial bank balances have already been recouped by the Treasury Single Account. But according to the most recent estimates, the amounts involved are not very huge, but we can discuss more about it later during the question and answer sessions, if you want. Then there's an anti-smuggling measure through the track and trace system for tobacco products. And if it is successful, then it would be expanded to other products also. Then the public disclosure of the spending made, emergency spending made on account of COVID. That is an important benchmark. The Auditor General's audit report regarding the transparency of COVID-related procurements needs to be made public. The government is bound to assume and to repay the circular debt lying on the books of Central Power Purchasing Agency to the extent of PKR 180 billion, out of which not more than 1/3 can be settled in cash and the rest through debt instruments. I'm sure many of you are already familiar with this development. And then, of course, the next one is probably the most daunting one of all of these structural benchmarks. The annual rebasing for the current financial year has to be done by June of this year. And considering that there has already been a significant hike in electricity prices, this is the one that is going to test the will of the government more than any other target or benchmark in the short run. Then there is an AGRA Act, which will give more powers to pricing power to the relevant government entities engaged in the oil and gas businesses. Then, of course, publishing the external audits of the Utility Stores Corporation. This is basically a move towards greater transparency of the state-owned enterprises. IMF is making sure that the government regularly carries out external audits and publicly discloses their results in respect of all or most of the state-owned enterprises. The final one is to have an asset declaration system for politically exposed persons, the high-level public officials. IMF wants the government to put in place a system whereby the high-level public officials' personal wealth is properly disclosed on a regularly basis. Next, please. What to expect going forward? I think there have been a number of tax policy changes during the last year and very recently also. Many of you must be familiar with the corporate income tax policy changes that have recently taken place. But going forward, you should expect more policy changes on the sales tax side. I have listed some of the key measures that the IMF wants to push for. And of course, the personal income tax reform also. IMF wants more progressivity. It believes that most of the individuals, even those who are existing taxpayers, pertain to very low marginal tax rate brackets. So IMF wants a review of the entire taxation scheme for the individuals, and it expects more individuals to start paying higher marginal tax rates. And of course, it wants the rationalization of tax credits and allowances for individuals and simplified procedures, very simplified procedures for the taxpayers, which fall in the category of very small taxpayers. I would like to quickly run through the key 4 or 5 aspects of the sales tax harmonization. Right now, there are 5 sales tax laws in the country. Every province has its own for the services, and the federal government has one for goods. So the move is towards agreeing on standardized definitions of goods and services, charging of sales tax throughout the country on the basis of destination principle, because it is a consumption tax, and the revenue should accrue to the government in whose jurisdiction final consumption of the goods or services has taken place. So that is a fair principle. Enabling the businesses to file a single sales tax return for their operations throughout the country. And of course, the final one, which I personally believe is not going to be easy to implement, but there is growing talk about this one, the possibility of unification of sales tax administration throughout the country under a single agency. And of course, introducing a uniform sales tax rate across the country with little or no preferential rates or exemptions. Next one, please. On the expenditure side, the two major policy changes that you should expect include significant restrictions on approval of additional expenditures, which are called supplementary grants in the jargon of the Ministry of Finance. So there are going to be severe restrictions on approving additional expenditures and deviating from the budgeted ones. And of course, IMF is very keen to push for subsidy reform and is advocating a policy of better targeted subsidies. And it expects the government to introduce changes so that energy subsidies are not availed by the relatively affluent sections of the society. So these are the two major aspects of the expenditure management program. Next one. The two major reforms on the debt management side include the strengthening and restructuring of debt office. After many years of its establishment, now there is a move towards expanding the office and assigning additional functions to it. So if these legal amendments, which have already been approved by the cabinet, are eventually legislated, then the debt office would be empowered. It would be more empowered than before, and it would practically be in charge of all commercial borrowing, whether domestic or external. However, other agencies of the government will continue to play an important role in the bilateral and multilateral borrowings, because those are considered partly to be an area of economic diplomacy and not just debt management. As far as the medium-term debt strategy is concerned, the IMF is very keen that the targets that are set in the debt strategy should have more sanctity and accountability should be structured around those targets. So I have listed here 3 or 4 of the key targets of the medium-term debt strategy. These include lengthening of the maturity profile of Pakistan's debt. There has been some progress in this regard over the next 2 years, but of course, the government needs to lengthen the maturities further. Greater issuance of fixed rate debt to manage the interest rate risk. And of course, considering the higher growth of Sharia compliant funds and bank deposits, there is of course going to be aggressive targets for greater issuance of Sharia compliant debt, and the regular issuance of Eurobonds in international capital markets is also becoming an important part of the debt strategy. In the past, Eurobonds have not been issued on a regular basis, but in future, the IMF is encouraging the government to have a regular issuance plan. Next one. On the monetary and financial side, IMF expects a gradual withdrawal of quasi-fiscal policies that are being administered by the central bank. These include a number of temporary refinancing facilities that were supposed to either support the export sector or provide an economic stimulus in the wake of COVID. The IMF also wants a reconsideration of the mandatory lending targets that are at times assigned to commercial banks and relax uh, many of the exchange restrictions that have currently been imposed. I think all of us or many of us are familiar with the move to amend the State Bank of Pakistan's Act and to grant greater autonomy to the central bank. There has been some debate going on in the media in this regard also. Some of the key points, aspects of these amendments include price stability becoming the primary objective of the central bank. I personally think that this was long overdue. Inflation targeting has been the primary objective of most central banks around the world, and it is high time that the price stability objective is assigned to the state bank also. And then greater financial autonomy for the bank, a collegial decision-making framework where a high-level body of senior executives will make the key decisions of the central bank, and restrictions on quasi-fiscal operations being run by the central bank. The IMF believes that the central bank should be focused on the monetary policy and management of the exchange rate in line with the exchange rate policy. And the fiscal operations should be left to the government. And finally, the restrictions on lending to the government are, although I personally have some reservations on that, I believe that there should be a safety valve in the legal framework whereby the government can resort to the central bank borrowing in emergency situations. But the IMF expects the government to impose a complete restriction on the central bank lending to the government, partly because considering the fact that it has been allowed in the past, but this power was not used in a very responsible manner. So partly that is the reason why IMF is pushing for this one. Next, please. In energy sector, IMF is a strong proponent to increase power tariffs, even if energy prices become too high, and to align them with the cost recovery levels. This, I personally believe, is going to be a very tricky area, and the government will find it rather difficult to meet I'm sorry, I think the internet connection is a bit unstable. And of course, reducing the commercial and technical losses, improving the generation mix of the country, and reducing the overall power generation costs so that the energy sector becomes more viable. The IMF expects the government to take over and assume the entire outstanding circular debt and pay it off over the next few years so that the power sector has a clean slate and it can move towards financial viability in future. And of course, the power policies should be redesigned to ensure more competition in the sector. Next slide, please. Next slide, please. Sve reform has been an important area for the IMF. And the IMF has convinced the government to come up with a new SOE law, which clearly states a rationale for state ownership of corporations. And should require the government to ensure that the state-owned entities are run on a commercially viable basis and lay down the principles for oversight and ownership arrangements. The government has already published a triage with the help and support of the IMF, which basically identifies which state-owned entities are going to be retained by the government and which ones are going to be either privatized or liquidated. The IMF also strongly advocates the establishment of a central monitoring unit for state-owned enterprises to be established within the Ministry of Finance. And finally, the transparency of operations and finances of the state-owned enterprises is an important concern.
You're on mute.
Yeah, I will unmute myself. I'm so sorry. You had mentioned that the internet connectivity out of Lahore is kind of reliable. But I think we're almost done. Let's move on to the next slide. I will just try to quickly run through the remaining slides so that we can spend some time at least for the question and answers. And finally, the remaining structural policies pertain basically to improving the business environment, the measures to enhance competitiveness of the economy, mainly improving the regulatory environment, taxation as well as non-tax regulations, tariff rationalization to lower the cost of inputs, and promote industrialization in the country, and the electric vehicle policy, of course, which will be good for the environment, lower the fuel imports, and lead to higher investments and technological improvements. And better governance, some aspects are listed here: an asset declaration system for high-level public officials, financial institutions, will be required to monitor the politically exposed persons and suspicious transactions with more diligence. And the national financial intelligence will be strengthened. Next one, please. Now, the major challenges to the policy changes and the administrative changes that are needed to the IMF program successful. I think the foremost is the trade-off between fiscal consolidation on one hand and GDP growth on the other hand. And the current IMF program is particularly tricky because on one hand, it requires Pakistan to significantly increase its tax to GDP ratio. And on the other hand, the pandemic, there are serious concerns on regarding the GDP growth of the country and the desire to stimulate the economy in the short run. The IMF is expecting a major adjustment of the primary balance in the range of 3 to 4 percentage points of GDP. So that is not going to be easy due to the reasons that I just explained. In terms of debt management, which is an area I have myself been dealing until recently, the IMF, of course, is very keen that the maturity profile should be lengthened, but we all know that longer term debt also entails a higher cost of borrowing. So another dilemma for the government is how to balance the two objectives and how to manage this trade-off. Considering that Pakistan's financial management is not very sophisticated at the moment, the systems that are in place and the forecasts of cash flows are not highly reliable. Another challenge that has been posed by the current IMF program is the satisfactory management of cash flows by the ministry without to any borrowing of finance has been quite successful in meeting this challenge, but nevertheless, the challenge is an ongoing one. And of course, the cost of fixing the circular debt is huge. The government is now expected to assume the outstanding debt and to make sure that future growth in circular debt is contained. So these require very tough decisions and redesigning of policies. So this so far has proven to be a big challenge. I think this is one of the areas where very little progress has been achieved since the current IMF program began. So that definitely is an area of concern. SOE reform, I would say, is always easier said than done because state-owned enterprises are huge entities. They have a momentum of their own. the government is moving in the right direction by passing the necessary legislation and policy changes, but turning these state-owned enterprises around and running most of them on a commercially viable basis is going to be a huge task. And finally, one area that I would like to share with you out of my own experience is the ability to effectively negotiate with IMF. Typically, when a country is in an IMF program, you have very little time and you have to respond to a number of policy and administrative and legal changes that come in the form of conditionalities and expectations from the IMF. So it is very important for the key officials in the relevant government agencies to be very well prepared, to have their own plans and strategies as to how to deal with those situations. And in the areas where they think that the proposals made by IMF need some modification or a somewhat different strategy needs to be pursued, they have to be very quick on their toes and very well prepared to be able to convince the IMF to follow somewhat different strategy. I have had firsthand experience of this when I was negotiating with the IMF regarding some of the debt. So I can tell you for sure that effectively negotiating with IMF is no easy task. Next one, please. What I want to tell you is that the IMF program brings many opportunities also. IMF, as I said earlier, has a very strong capacity in terms of the economic, the financial, and the fiscal policies and the structural policies that countries should follow. So IMF can provide very valuable technical assistance. And I personally believe that the countries which are not strictly in a crisis, but where there is a realization that some of the policies need to change or improve, should voluntarily put IMF and seek help. I think that the capacity of IMF to provide technical assistance is underestimated. Not everything that IMF proposes may be perfect or highly suitable for a particular country in a particular situation, but by and large, the recommendations of IMF are grounded in international best practices and in international experience. So this is a very, very valuable service that IMF can provide. And then is the impetus to carry out overdue policy and administrative reforms. Many of us working outside or within the public sector feel very strongly for various policy and administrative changes, but the political and economic situation is not ready for those changes to be instituted very quickly. The IMF program typically provides this opportunity. If the leadership of the country is ready, they have a clear plan and prioritization of which policy and administrative changes to make. The IMF program provides a very strong platform to quickly institute those changes. And then another benefit of IMF program is the impetus to find alternate solutions. As I just said, good negotiation with IMF requires part of government agencies also, but there is a huge opportunity to persuade and convince IMF to work on alternate strategies. I have had this experience personally in the area of debt management. I was able to convince IMF on a few aspects of the strategy, which I believed should be undertaken differently. So very that was a great experience for me, and I give a lot of credit certain to IMF for certain changes that were made that were not even contemplated by the IMF itself or even the government itself before the IMF program began. But once the pressure was built by IMF to achieve certain targets, then we sat together and found some new solutions. Reduction floating rate bonds is one of those solutions that we jointly developed with IMF, which were not initially on the radar. So you must have those of you who work for banks or other investment organizations would know that introduction of long-term floaters is a relatively new phenomena, and it has helped the government of Pakistan a lot in reprofiling its debt rather quickly and at a very reasonable cost. So things like that can happen. IMF is putting pressure on you to do certain things. And you, if you can come up with new ways of solving those problems, that can be actually good for the country and for economy in general. And finally, the heightened emphasis on transparency and communication. Probably my biggest learning over the last 2 years working with the finance ministry and working closely with the IMF has been the realization that transparency is the first step towards effective accountability. When the government agencies become more transparent, they communicate with the markets on a regular basis. Their publications go out on a regular basis. The public gets to become more aware. Public debate is generated, and there are opportunities for the civil society to give feedback to the government through various channels. That is actually a very effective and subtle way to make the government feel more accountable and responsible to its citizens. So one major learning on my part has been the realization that transparency and regular communication are very important steps towards effective accountability of the government. Next one, please. So this is the final slide. If you had to have one takeaway from today's presentation, the one variable that I have learned over the last 2 years is probably the most important if we want to put the economy of Pakistan on a path to sustainability, fiscal and debt sustainability, is the primary balance. And I would tell you why. When the debt to GDP levels are low, you can afford to run primary deficits. Why? Because the cost of borrowing is typically low because you're borrowing less, and your debt levels are also low, so you can afford to accumulate more debt. So even if you're running primary deficits and spending most of the additional expenditure on development projects, that strategy may be feasible and workable for you. But once the debt to GDP levels high, running primary surpluses becomes crucial. And primary surplus is not primary balance is not just one variable. If you analyze it in some detail, you will find that it actually embodies a number of variables. You have to increase your taxes, you have to control your expenses, you have to turn around your state-owned entities, you have to fix the bleeding operations like the energy program and contain the circular debt. So you have to do a host of things in order to be able to generate a primary surplus. So my take over the last 2 years has been that if we really want to turn our country around and put it on a path to fiscal and debt sustainability, then we must make a commitment to run primary surpluses over the next few years. The IMF's projections are also forecasting that the country will be able to generate primary surpluses in the range of 1.5% to 2% of GDP over the next few years. In my humble opinion, the primary surpluses should be even larger, but even meeting the IMF's projections will be a big deal because until recently, Pakistan has run deficits in the range of 2% of GDP. So there has to be a major fiscal turnaround in order to go from a deficit to a primary surplus. I think that brings us to the end of the presentation. Thank you so much for your patience and my earnest apologies for taking too much. I practiced this presentation before. I had no idea that it will take me so long. My apologies for that. And thanks a lot for your patience.
Okay, thank you so much.
Asim, over to you.
Okay, thank you so much, Dr. Rahid Saab, for giving such a comprehensive and insightful presentation. I think without a further ado, we'll move to the question and answer session. So I've got a lot of questions at our backlog. But before moving to one of the question, I would like to ask is, what do you think, how much challenging the current IMF program is for Pakistan? Because there are certain conditions which are very much stifling in nature. For instance, they have to raise the tax to GDP ratio by 1.5% in 1 year. They have to increase the electricity tariffs by roughly 30 to 40%. Do you think this program will smoothly sail through, or they will be up for renegotiation at some point of time?
I would say that renegotiation is never a bad idea because as the program progresses, you learn from some of the mistakes that have been made. And if the experience is showing that some of the targets need to be revised or renegotiated, the government should, of course, try to do that. I, on my part, have found that IMF is pretty flexible also, where it is convinced that the government made its best efforts, but the political, social, and economic conditions were not ripe for those targets to be met. It typically agrees to give waivers or to extend the deadlines for those targets. I personally feel that yes, you are right. The situation is particularly challenging in the wake of the pandemic. I think that the economic situation of the country is such that the government must show the resolve and the commitment to try and meet most, if not all, of the targets. Because I would say that these targets, even without IMF, if we are convinced that these policies are in our line without an IMF program, we should be setting similar targets for ourselves. and doing whatever it takes to meet them. So it should not always require IMF to come and tell us what needs to be done.
Okay. So next question is from Kurotalen. She's asking what's the sustainable level of gross financing need to GDP ratio for Pakistan? I think you had mentioned in one of the slides the sustainable level of current account deficit, which was at roughly at 3%. But don't you think, given that the foreign direct investment sources for Pakistan are completely drying up, don't you think the sustainable level would be much lower given that our external debt to GDP ratio is already at an elevated level?
Yeah, I think the IMF's benchmark for gross financing needs to GDP ratio is 15% for developing countries like ours. Our GFN to GDP has been much higher. It was in the range of 35% of GDP until a year ago, I think FY19. But in its current report, the IMF has noted that the GFN has declined significantly to around 28% in FY20. So there has been an improvement on that front. But of course, IMF is pushing for more. And I also think that it's in our own interest that government should borrow mostly through longer term instruments, so that its ability to any short-term crises is stronger. Regarding your question pertaining to the optimal or sustainable size of the current account deficit, I think you projecting a rather quicker convergence to a higher GDP growth. So IMF expects that inflation will be tamed very soon and GDP growth will be converging to around 5% very soon. So currently are not too high. They are in the range of 5% of GDP per annum. Most of our gross financing needs arise from domestic financing requirements because it is the domestic debt which is mostly short-term in nature. So it can be debated
Okay, so the next question is from Sajjad Anwar Saab. He's asking, what's your take on the IMF's medium-term GDP growth projections? I think they were roughly close to 5%. Historically, they've also given such projections and they have never been achieved. Do you think they are realistic, whatever the IMF gives in the documents?
I would say that the in many of the policies and institutions of the government, if we assume that those improvements will take place, then the GDP projections do not seem very unrealistic. But if we believe that all those underlying policy changes are not going to take place, then of course, Mr. Sajjad has a point, then probably we will fall short in terms of GDP growth. Particularly because right now we are in a kind of a difficult situation. The global economy is slowing down and our debt levels are already high. So this is not a very good situation. That is why we need a lot of institutional and policy reform. And the more commitment the government shows in that regard, the better it would be for the country.
Grace, you need to unmute.
Right. Okay. The next question is from Mr. Taha. He's asking that government wants to renegotiate the power tariff hike and SBP autonomy bill, which was agreed recently. Do you think IMF will agree on this?
I think now you're asking questions that are way beyond my paycheck. uh, I believe, honestly, that unless the government comes up with a viable alternative plan, the IMF is not going to agree because right now, World Bank and IMF are working together uh, uh, and pushing for the energy sector reforms. Unless the government of Pakistan has an alternate plan which shows to the IMF that the desired reductions in it would be very difficult for the IMF to simply ignore uh, the way energy sector is currently going on.
Thank you. The next question is from Satish. He's asking that whether the government can increase GST on the products which are part of agricultural chain. I mean, these have been generally the untaxed or no-go areas. So, can the government sneak into these areas?
Although I am not privy to the negotiations in that area, but I know from whatever exposure I had that IMF in general exemptions of any kind, and IMF equates them with subsidies, uh, which are which are kind of inefficient and distorting for the economy. IMF believes that the subsidies are best paid in the form of direct financial transfers, and all other forms of subsidy should be temporary at best, introduced only in the time of extreme crises, and phased out as soon as possible as the economy recovers. So my take would be that it may not be easy for the government to either introduce or continue with such exemptions.
So the next question pertains to the area of State Bank of Pakistan. I think State Bank of Pakistan took various fantastic measures during the COVID crisis, like the turf facility. Do you think IMF will put a halt to, you know,
I can't hear you clearly, Wes. Can you give me a few seconds? Maybe I can try and fix my connection quickly.
sure, sure. You're audible, I guess. You should be back.
Can you hear me? Awais, can you hear me clearly, better than before?
Yes, yes, बिल्कुल ठीक है. So can we proceed? Okay.
Yes, please do.
Okay. So the next question pertains to the activities of Central Bank of Pakistan. As we saw during the COVID crisis, uh, they incentivized the industry and by giving this turf facility. Do you think IMF would limit or put a ban on such activities, given that there are certain limits on the NDA of the central bank?
Yes, definitely. In fact, the IMF has already mentioned it as one of its concerns in terms of the monetary and financial policies, and has urged the government already in its report to phase out these refinancing schemes sooner than later. So you're right, it will not be easy to continue these schemes for a very long time. And one reason, of course, is the implications for the net domestic assets. The IMF has categorically mentioned that. And apart from that, IMF believes that these amount to these subsidized financing schemes amount to quasi-fiscal operations. And these can compromise the central bank's ability to carry out the monetary policy properly. So the IMF has already raised some concerns. So my take would be that these would be gradually phased out, although right now the IMF has decided to live with these schemes. It has not included the phasing out of these schemes in the structural benchmarks or its targets.
So I think we'll take the last question from Tahaf and Javed. He's asking that the government has largely failed in increasing the tax base. So how will it meet the revenue targets, given the targets are very much Herculean in nature?
I think this question again is beyond my paycheck, and I will urge the CFA Society to let it be a series of sessions pertaining to the IMF program, and let us invite professionals and officials from other government agencies also. I personally believe that I have some ideas to improve the taxation system, but I would not like to make any sweeping statements right now, because honestly, although I have worked for FBR for a few years, but I do not consider it to be my forte to lay down a strategy for enhancing the tax to GDP ratio. But I think the IMF program is a very, very comprehensive program, and the CFA Society needs to probably organize seminars on a regular basis on this subject, and let's invite more people, officials and professionals to share their insights with us. I will stop at that.
So let me jump in. Thank you, Warraich Saab. Thank you, Awais, for this session. Warraich Saab, really thankful for your personal insight, added insight that really, I think, improved the overall understanding and the interpretation. While we are also ready to hold more sessions, we'll be looking forward to engage more speakers, as you have suggested, and we'll also connect with you to bring those individuals to the CFA Society Forum and take this discussion forward. With that, since we have already exceeded by the time we allocated for this session, and with that, I would just thank you again and all the audience who were connected with us. and looking forward to the next session soon. Thank you very much.